With the Fed hiking, it seems likely that we might see a point in time where the US dollar might make a bit of a recovery against the Asian currencies.
So Daryl, many Asian currencies have enjoyed a very strong rally against the US dollar in the start of 2017. Now the big question here is this sustainable?
Yeah, that's a good question to ask, because really everything really depends on dollar strength or weakness vis-a-vis rather than whether Asian currencies can continue to maintain the strong performance. Because if you look at it, the US dollar has actually weakened, the US dollar index has actually weakened by about almost 5% against all the other currencies, the major currencies and Asian currencies in whole. So the big question here, I think, is more driven on what the US Fed is going to do, and whether or not that translates to US dollar strength. I think if you look at it on a purchasing power parity, a lot of Asian currencies are still considered to be undervalued versus the US dollar, because the US dollar has been rallying for a couple of years already before we hit this year. So there could be potential further upside. But having said that, with the Fed hiking, it seems likely that we might see a point in time where the US dollar might make a bit of a recovery against the Asian currencies.
Great, and now we have seen China's two-speed economy here. We've seen certain aspects in an uptrend and certain aspects in a downtrend. Now, why are we seeing this?
Yeah, I think there's been a very big difference depending on which China index you've been monitoring. If you look at it, the MSCI China index, for example, is up something like 35% year to date. Whereas if you look at the onshore China A-share index, it's only up something like 6 or 7%. And I think the main reason for that is really the tech sector, because the likes of Alibaba, for example, and Tencent, Alibaba is up over 50% year to date, driven by the huge momentum into tech, as well as the growth prospects and profitability of the company. And then likes of Tencent as well, with its arms, it's almost like a huge conglomerate in a whole bunch of different kinds of businesses. So again, a very strong growth company. Those companies actually have been driving the MSCI China index higher, because just by the weightage and the sheer outperformance. So if you look at it, that's the main reason why MSCI China is up so much, whereas the China A shares have been struggling to a certain extent.
And one area that has been performing very well is the North Asian markets, such as Taiwan and Korea. Now, have they ran out of fundamentals? Is there a little bit of a risk here?
Yeah, I think Taiwan has been driven mostly by the Apple supply chain story, because obviously Apple is coming out with their new iPhone later this year, and that's driven a lot of the component stock manufacturers up. A number of them are up again over 50% on a year-to-date basis, notwithstanding the recent correction in the tech side. But if you look at it, I think that the Taiwanese stock market, at least the tech side, probably still has some further upside to go. But obviously, investors probably should be a bit more cautious moving forward. Now, the Korean market is a slightly different dynamics. The Korean market is still one of the more cheaper markets. In fact, the second cheapest market in the Asian universe right now, still trading at a forward PE of a single digit, about 9.5 times. So there's still value there. I think the reason why that market is discounted to a certain extent is because of geopolitical risks, because of North Korea, for example, a threat of a missile there, but also because of the chaebol conglomerate system in Korea, which is not very shareholder friendly. But things are changing to a certain extent there. Corporate governance issues are coming to the fore. Companies like Samsung, for example, while they're not necessarily restructuring, they are committed to more share buybacks and returning more dividends to shareholders. So I think there's certain improvements that we could see there in terms of higher ROEs coming out from Korean companies, which could then lead to a re-rating of the stock market there.
Fantastic. Well, as always, it's great to hear your insights. So thank you for coming in today.
Thanks, Jessica.
Well, that's all from us once again, but we do want to hear how you found this interview, and then more on Dukascopy TV.